Hey guys, it's Jamin Kirkwood with Secure Financial Management, and I want to send you out, it's going to be a series of 3 videos that I'm going to send you out here over the next few days. And we're going to be sharing our thoughts on a few different things, what's been happening in the markets, questions we've been getting from clients, and the plan is here, I'm hoping to answer maybe some questions that have not been answered for you yet, and just give you an insight into kind of the way we view things, and maybe some ways that you can take a look at things as well and try and digest everything that's been going on. Okay, and the first thing I want to talk to you about in this topic, and we've titled this winning in the long run by not losing now, right? And that might sound like a funny title because none of us really feel like we've had any winning going on lately with everything that's been happening. But the key there is in the second part, right? In the long term. Most of you, I'm assuming, unless you're a day trader or something like that, which I don't know why you'd be watching this video if you are, because that's not who this is really catered for. Most of you, I'm assuming, are concerned about your investment portfolios, your financial planning in the long run, right? Not over a 3 to 4 week period, a 3 to 4 month, or 3 to 4 year period even, right? It's a decade sort of process that you want to have a plan, a solid plan in place, whether you're already in retirement or maybe you're building towards that goal, right? And what you do here, what you do now, is going to be vital for the integrity of that long-term goal. And what I'm getting to here, and this is something I'm sure you've been thinking about with your investments, and we've had many clients that we've talked to this about, is, hey, should I just go to cash? Should I just sell everything that I have, go into cash, I can't take it anymore? Or it could be the idea of I'm going to go to cash and sit on the sidelines and I'm just going to wait and kind of pick my timing out, right? I'll talk about the 2 different factors of that here, and the issues you're probably going to run into with that. Okay, so first thing, let's talk about if you've got your investments, maybe you're really close to retirement or you've already retired. And we've got these accounts that have been impacted heavily in such a short period of time too. Usually a process like this will take 3 or 4 months or more to play out over. This time, we got this in 2.5 weeks. I think it was actually, I was going to say 35%. I think yesterday the market's closed 37% down, right? In a few weeks. Pretty shocking, and kind of hits you in the gut, right? Just you look at those numbers and you're just like, ugh, my money went down so quick. Should I just take what I have and hey, at least I've got that? Can you do it? You can do anything, but this is what we talk to our clients about, all right? Is if you've got a portfolio that's down 25, 30, 35%, being affected by the markets, and you're pretty much going to be affected by the vast majority of sectors in the market right now have been affected, right? So your portfolio probably is. If we do that, right, what we're doing is, one, we're guaranteeing that we're locking in those losses probably for life. And why I'll say probably in a second, I'll explain to you, probably for life, all right? So it will be almost, I won't say impossible, but it will take a long time to ever make up the big downdraft that we've experienced if we take those losses out and we're not exposing ourselves there, our investment portfolios, for the eventual upswing that will come. And historically it tells us that always comes. The time of it, don't know, and that plays into the second part that we'll talk about in a little bit. But be aware that it is going to be very difficult to ever recover and get back on track with your plan if we give up now, right? If we don't basically hold our course and keep moving towards that goal. Okay, that's the first part with, hey, the idea of can we go into cash, right? Usually part 2 to that conversation is let's go to cash or freeze the account and we're going to sit on the sideline. All right, we're going to sit on the sideline and then we're going to pick the opportune time to get back in. Probably you're not going to pick the opportune time to get back in. I don't know where that is, when that time will be. The smartest investors in the world don't know. Nobody knows when that date might be, right? So sitting back on the sidelines and trying to get in at the opportune time is very unlikely to happen. And let me explain to you more likely what actually will happen, okay? There's actually a trading pattern that's called a bull trap, okay? Sounds kind of like a funny term, but you know there's bears and bulls. Bulls are good, markets are going up. Bears are bad, markets are going down. There's something called a bull trap, and this is how a bull trap plays out. And it's very, very likely that a bull trap that I'm about to explain will happen in this market, because it happens at almost every time a market is so depressed. What you're going to find is you're going to get into cash. You're going to sit on the sidelines waiting for the opportune time, right? The market's going to go up big. And you're like, oh, maybe this is it, right? The market will go up big a second day, maybe even a third. And on that third day, you're like, this is it. I got out of the worst of it. Now I'm going to get back in and I'm going to get the whole upswing. And the next day or the day after, the market collapses again. It's called the bull trap, and it happens to investors all the time. They see the market go up, and now they've missed out on those 2 big days of gains, right? Maybe they've lost 10, 15% of those gains. They hop back in just in time for the market to collapse again. And it happened with the markets down as much as they are right now. It's almost a guarantee that that will happen at some point. We'll have a rally, we'll have another rally, it starts to look good, and then boom, everything falls apart. It's part of a bottoming process as we're finding the bottom of where this market is. It's very likely anybody trying to time the market is going to have that happen to them. And what that does is that actually compounds your losses, right? Because what happened was you were out of the market for those first couple of steps up, you missed that. You got in just in time to have everything go back down again. Timing the market's tricky. Nobody can really do it in the long run. You might get lucky a few times, but it's not going to be a continued trading pattern. Keep that in mind as you're thinking about, should I go to all cash? Should I get out and sit on the sidelines and try and figure out when I'm going to get back in? It rarely works. Guys, we're going to have a series of these videos coming out to you in the next few days talking about different things like this and sharing our thoughts and trying to just impart some of our knowledge so that we can all get through this tough time together. As always, nothing we talk about in these videos should be considered a recommendation. If you want to talk about your personal financial situation, please give us a call, 210-428-6250. We'll talk to you then.